Given the market's strength over the last couple of weeks, with obviously new data coming out, Bank of Canada has cut rates, US Fed has cut rates again, we've seen an upward trend in the markets. So most investors and Canadians are spending a lot of time focused on the growth of the portfolio, the growth of the markets. But what generally is overlooked is the after-tax money that people are putting in their pocket. So one of the things that I've been talking about beyond just making sure you're tax efficient, whether it's interest income, capital gains, or dividend, but is this other one called return of capital. Return of capital is taxed similar to how capital gains are taxed. So very efficient here in Canada based on the current income tax rules. There's four key benefits of return of capital. So number one, it's extremely tax efficient. So unlike interest and dividends and capital gains, income classified as return of capital is generally not taxed in the year it's received, but rather in the year that the investment is sold. Number two, cash flow stability. Again, investments that distribute this type of income are particularly appealing if you are seeking regular, consistent monthly cash flow. Okay. Number three, tax deferral. As I mentioned before, you can actually defer the tax that you have on this type of income until the year that you actually sell it. And then the last one, and I think this one is a pretty neat one, is you have the ability to utilize capital losses or realize capital losses. We never like as investors to have capital losses, but there's a tax strategy at the end of every year, which you might be doing this year, which is harvesting taxable losses so that you can actually offset it against gains. So one of the benefits is interest, dividends, and capital gains that you generally receive throughout the year, with the exception of the latter one. You cannot deduct capital losses against interest and dividends. So the benefit is you can actually deduct it against capital gains. So in the future, when you sell this type of an investment, you can actually utilize these capital losses against the gain, minimizing your tax even further. So again, it's very advantageous to be utilizing this in your portfolio, depending on your risk tolerance, time horizon, and so on. So for those of you that don't know or haven't been taught about return of capital income, I think this is definitely something that you should actually be considering and asking questions. So if you do have some questions, give me a call, send me an email. Happy to spend 15, 20 minutes just educating you on this type of income. Appreciate it. Have a great day.